Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Castrol India, whether it is a buy at current levels or you should avoid the company. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I go to the analysis of Castrol India, here's a small request. Kindly support me through Patreon. Once you do that, you'll get a lot of benefits from the $2 to the $10 tier and the $25 tier. I'll help you with your portfolios. I'll help you with any stock queries that you have personally, and it will be a personal letter from my side on any stock queries or portfolio that you have a problem with. Plus, you'll get exclusive presentations as well as text documents with regard to stock analysis, market analysis, and whatever that is happening in the current market. So kindly join that. Even a $2 support from you would go a long way in helping me grow this channel on YouTube even further. Coming to Castrol India, so it was established in 1910, and Castrol International or Castrol Global Limited was established in late in 1900s, late 1800s or the late 19th century. So quite an old company Castrol is, and they provide oil lubricants and products, different types of oil products. And probably all of you would be aware of what Castrol does. They have global presence with businesses in major centers, and they are the market leader in this particular space. They cater to two-wheelers, four-wheelers, and particularly commercial vehicles all across the globe. And they provide these lubricant products for the better efficiency of these vehicles as well as other oil products. So it is a quite a gourmet of products that they have on their website. The market cap of the company is 14,000 crore, but the stock has not done a lot over the last 3-4 years, and it should have. In fact, it has declined over this period. If you look at the financials of the company, then the sales for this December quarter has come in at a decline of 3%, whereas the profit has increased by around 30%. But this was because of the lower taxes, which helped the numbers on the bottom line, and slight operational efficiency improvement that the company showed. It is a completely debt-free company and gives a very good dividends to its shareholders, and has been a consistent dividend player over the last, you could say, 8-10 years. The return on equity of the company is at 64%, which is absolutely magnificent, equivalent to what FL does, but a totally different business this is. And the operating profit margin is solid at 30%, and that's why most of the investors who have invested into the company stay with it, because it gives consistent returns over 10, 12, 15 years. But over the last 3, 4 years, it has been pretty subdued as a stock. So if you look at the performance of the stock is down 35% over a 2-year period. So if you look at the 2-year chart, the stock is down around 35%. The numbers have been decent and strong, but have not been that extraordinary that people would get into it. The return ratios, as I mentioned, is pretty big, and it is trading at only 14 times earnings at the moment. So not very expensive, not trading at 25-30 times. Domestic institutional holding and promoter holding is big, although FIIs are not quite invested that much, but DIIs and promoter holding is big, and so 16% free float is there. The dividend yield is pretty good even at these levels that is trading at. So what could be the, or what are the issues with the company that due to which it is not doing well as a stock? See, these are some of the reasons which has plagued the oil industry over the last 10 years. And this is because of which, and these are the reasons because of which the stock is not moving. It is not that these are the concerns at the present moment, but in the future it looks like these concerns will not be mitigated because of the kind of pressure oil is facing at the moment, because Castrol is completely opposite to what other companies does in the Indian market. So here appreciating oil prices say to 80, 90, $100 would help Castrol, because although they source raw material, but they are also producing a lot of oil products or subsidiary products of oil which they sell to the market, and so their prices would go up. And remember, when the prices of a product goes up by 20%, the company makes a profit of 30-40%, because they'll increase that prices not by 20%, but they'll increase it by 26-28% at least, or even 30%. So these are the reasons why these companies which produce or manufactures the products for which the prices go up, their revenues go up. So if for instance rubber prices go up, and there are rubber producing companies, I'm not talking of tire companies, but companies that produce rubber and sell rubbers to these tire companies, their revenue will shot up like anything, because they will increase their prices even further than what are the prices that are in the, you can say, the wholesale market. So all these permutation combinations come through. So depreciating rupee is one of the reasons, because they buy in dollars, and everything that is done with oil is in dollars. So if rupee depreciate, they need to buy more dollars from the rupee, and then they have to spend more rupee, Castrol India in itself, to buy the stuff, and that's why they'll have to spend more. So expenditure increases. Recession in auto sector is another huge reason for the decline in Castrol's stock price, and the decline in favor towards Castrol India, and people are not looking at it because Castrol serves the auto market. And look at what has happened to the auto market over the last couple of years, since the start of 2019. It has been continuing start of 2018, and it has been continuing in 2020 as well. It looks like this year will also go through a similar pain, and that's why when people are looking at Castrol and looking at the fact that over the next 1 year there is not much of a hope of a recovery, then people will not look at such stocks. So that's why not looking at Castrol for the next 1 year, because auto industry is under pressure. The auto sales number have come through, and Maruti has shown a decline. Although the decline has reduced, the pace of decline has reduced, they have shown a decline. Not much of a help from Eicher. Tata Motors has shown a sharp decline. Mahindra and Mahindra, although have seen very good tractor numbers, but their passenger vehicle sales have declined sharply. So all these things are coming together to haunt companies which produce oil lubricants, etc., such as Castrol. Raw material prices have increased, so whatever raw material cost that they were incurring earlier, it has increased over time sharply. There have been slower demand with crippling economy in India as well in Europe, US. So what that has done is that not only from India but even from abroad, they are not making a lot of money. And you need to take into account what has happened with the virus issue in China. Due to that, a lot of industries have been affected either directly or indirectly, and Castrol is one of them, which is affected indirectly, because autos would not be sold. Companies are shutting down their businesses for a while, at least 1 week, 2 weeks. The business have been shut down in many parts of East Asia and Europe, say Italy, etc. These things are hurting companies which are export oriented, which have businesses abroad as well. And one of the biggest reasons for this kind of sentiment with Castrol is the fact that it is completely out of favor. The industry of oil, whether it relates to oil rigs such as Aban Offshore, etc., whether it relates to these lubricant companies, whether it relates to direct oil companies, ONGC, etc., which excavates oil or drills oils, all these companies are under pressure. So these are the major issues that the company is facing, and because there is no, you can say, vision that looks like over the 1 year this would solve out, and that's why people are staying away from such a company like Castrol. So these are the major issues that this industry and the lubricant companies are facing. If you look at the technicals of the stock right now, the short-term support lies between 130 to 140 rupees around that. In fact, these are strong support levels 130, 135, 138. If you look at it, 50 DMA lies at around 138. The 200 DMA is around 135. So this 10 rupee region is a pretty strong support. But the problem is that it is not going up. It is not going above, say, 155, 160 levels, and that is the major issue. It is not an outperformer technically as well, so you need to take that into consideration. But what you can do is probably buy with a stop loss around 134 or so, and trade into it. But again, if I were you, I would rather go for a major breakout which is expected above 155, and only then look at the stock, rather than buying at these levels and get stuck with the stock, because opportunity cost will be huge. So if you say buy at around 135, 138, and probably have a 130 stop loss, your stop loss will not be triggered, and neither the stock might go above 160, so you'll not make any money. And just staying with the stock will lose you a lot of time and money that you could have invested in other companies. So that is my opinion. Standard disclaimer applies. So technically speaking, it is range bound, and a major breakout is expected only above 155. So what needs to be done? You can buy it as a long term play, and probably after 3 4 years, when things revive on the oil front, this stock will do appreciably well. I've seen the stock go to 330, 350 levels even. So at this point of time, being at 130, 140, it is kind of very attractively priced. The only point is it not moving up. Can yield 15 to 18% CAGR return at it, as it has done over a 10 12 year period. So you can trade with a stop loss of 139 or a stop loss of 135, as I mentioned. And auto sector need to revive for this stock to really do well. And the sector in the oil and gas industry with respect to excavation or drilling has to revive, and especially the auto sector on the retail front has to revive here in India and abroad. So look for other consumption plays, another thing you can do rather than looking at Castrol at the moment, and only have less than 5% exposure into such stocks. So this was my video on Castrol India. Please like and subscribe my channel, hit the bell icon, and kindly support me on Patreon. Thanks a lot for watching.